All right. I want to talk a little bit more under the principles of title insurance about what a lien is and actually how do they affect the title. Okay, we've kind of touched on it, but I want you to understand. A lien is a future interest in property. It's not actual interest. It's a charge or a claim made against a piece of collateral by someone that has loaned you money. All right? A lien is a type of encumbrance, usually deals with money. All right? Easements are a type of an encumbrance, but not money-based. All right? The easement, like the alley. All right? When you borrow money from an individual or a bank or any financial institution and you use it to buy property, they are going to want some collateral. All right? That collateral, all right, I'm going to make you guys think like a real estate agent here for a second. So let's say the First Bank of Raymond. I want to loan some money out, and I'm going to loan it to Barb. All right, Barb, so you're going to buy my famous mythical $100,000 house. So you're going to, and let's say for the sake of conversation on this, get a 100% loan, right? 100% LTV loan to value. So how much money did you borrow? It's not a trick question. Yes, 100,000. Doing it just so it's real simple, okay? Now, so I'm going to loan you 100,000. Do I trust Barb? Don't look at me like that. Of course I trust you. No, I don't. No, I don't. Think about me as the First Bank of Raymond sitting in Barbados, which is where I would love to sit my bank. But Barb is sitting in Greenwood, Ohio. Where the heck did that come from? Greenwood, Indiana. I don't know Barb. I don't know her anything, but she wants $100,000. So I am going to ask for, that's called the IOU or the note, by the way. I'm going to ask for a collateral to use as collateral for the loan. Now, here's the first thing. Barb wants to offer me this piece of property as collateral. Now, take a side note or sidebar for you attorneys out there. How do I know, sitting in Barbados, that this piece of property or collateral that she is offering me is worth $100,000 that I'm loaning her? Because certainly I don't want to give her $100,000 and she's going to hand me back that black marker right there you got as collateral. I'm going to go, well, no. I want something worth the $100,000 because I'd much rather you give me the $100,000 than give me the collateral. And believe it or not, banks are like that, okay? They'd much rather have the money than the actual collateral. Matter of fact, I'd much rather have collateral of $200 for the $100 I loaned you because you're more apt to give me the $100 back than give me the collateral. Now you guys see why they don't like to loan 100%. If they only loaned you 50%, in essence, they're pledging something worth twice what they owed you. They're more apt to pay you what they owe you than give you the collateral back. Start to see how this is working out a little bit? All right, so back to what I was saying. So how do I know that this piece of collateral is worth the $100,000? Because that's what she's asking for. Exactly, an appraisal. That's where an appraisal comes in. That's why we have trained, educated professionals that give their opinion on the value of property, and they're all trained the same way, and they're all supposed to work the same way. Perfect world, okay? We're not going to deal with that subject right now. So what happens is I hire somebody as the bank employee to represent me. And here's another thing, insight. Guys, appraisers work for the bank. They don't work for the seller. They don't work for the buyer directly. They work for the bank because the bank is using that guy's opinion to tell me that the collateral that Barb wants to give me is actually worth $100,000, so I can give her $100,000 and she gives me the collateral or gives me a promise to the collateral if she doesn't pay. Hear what I just did? I just changed it on you. She doesn't give me the collateral. She gives me a promise to give me the collateral. That promise to give me a collateral is called a mortgage. All right. Now, we record those collaterals, and I record my interest in that property. My interest could be ownership down the road if Barb fails to make her payments. That future interest is a lien. Seeing a lot of deer in the headlight look. Should I snow again so you guys catch my drift? Let's try it again. I'm going to loan you money, and then I'm going to go down and record the fact that I loaned you money so that you can't give money somewhere else without everybody knowing it's me. That's a lien. All right? That's all it is. A lien is a future interest in ownership. It's not actual ownership. It's based upon ownership providing that you failed to do something, i.e. make your monthly payments. So according to the IOU or the note or the financing vehicle, you're going to pay me $300 a month for the next 30 years at 4% interest. And if you fail to pay me back, I get a chance to take the collateral to make myself whole. That collateral is the house, so I would record my interest in that, and that interest is a lien. All right? That's all it is. A lien allows future ownership providing you don't do something. Here's the other thing. I can lien anything you give me as collateral, which should make you think in your head, that's right, keep shaking your head, Dave, that you can give me anything in collateral that's worth $100,000. Think about that. The bank does not care what you give as collateral. They only care that it's worth $100,000. So if you're buying a house in Indiana and they say, okay, we're going to loan you $100,000, but what have you got as collateral? And you say, I've got a free and clear $300,000 condo in Miami. I want you to place a lien on it, but I'm using the money to buy the house in Indiana. They'll do that. But if you miss the payments, guess which house they're coming after? That's right, the 300. Actually, they'd probably be more apt to do that because you're borrowing 100 and collateralizing it with something worth 3 times that. They're much safer than if they loaned you 100 and collateralized it with something that's of equal value, 100. Okay? So they probably would do that deal sooner because your collateral is 3 times the value of the loan, and that's only a 33% loan to value, whereas if they use that asset that you bought here in Indiana, you're 100% loan to value. Got it? Okay. So that's all lien do. They affect a person's ability to sell the property. They affect my ability to sell the property. Think about this. Okay, let's now say my $100,000 home's worth $150,000. And you guys, maybe we should back up for the basic part of this. Let me grab a drink here of coffee. Yeah. That's exactly where we're going. I have a $150,000 house. I owe Fifth Third $100,000. I sell the house for $150,000. I pay off the first lien of $100,000 because he recorded the lien through and did all the title search. I now have $50,000. If I record a second lien and I want to borrow money and we do a title search and the title search comes back as, oh, Raymond owes $100,000 to Fifth Third, they're like, well, that's okay because the house is worth $150,000. He wants to borrow, let's do the easy math, $50,000. That makes I'm loaned now $100 to my first, $100 to the $50 to the second. Misspoke. Do it again just so we catch it up. Sorry, Dave. $100 to the first, $50 to the second, and the house worth $150,000. I sell it for $150,000, pay the first of $100 off, pay the second of $50 off, and I'm free and clear, and I don't have any equity. All right? All that would be done through title work and title searching and all of that to make sure that those deals go through. All right? So all they do is, now we can play the game one more time. I'm sorry, let's play it one more time. Suppose I got a first for $50,000, a first for $100,000, a second for $50,000, and then I get another lien for $10,000 because I didn't pay my real estate taxes. I now have a $150,000 house and a $160,000 in lien. That becomes a problem. All right. Now you can obviously see real quick how houses can get what they call that in cars. Matter of fact, we joke about it all the time. Yeah, that's right. Upside down, underwater.